I'm delighted to be joined today by Mark Anderson, Director of Property and International for Whitbread Group, obviously the owner of Premier Inn, the UK biggest hotel brand. Thank you for joining us, Mark. Lovely to have you.
You're welcome, Carine. Nice to see you again.
Lovely to see you, Mark. So first, I think we'll get started more about the market overview, and I think obviously we released our business outlook publication, but if we look at it, if we give you a brief overview of where we are in the UK, I think you'll agree with me that it was a bit of a story of two halves during 2022. Obviously, the first part of the year, we saw a very strong recovery in terms of performance, probably a lot more than anybody expected to happen last year. So it was really quick, occupancy recovered, ADR were really strong, and a lot of market actually saw a significant increase in RevPAR. And on the back of that, we had a really strong year in terms of transactional activity. However, obviously with the situation in Ukraine and obviously the inflation cost, the energy cost, all of these headwinds we had during the second half, it's really had an impact on transactional activity and not so much on performance, but luckily a lot of hotels managed to keep their profit. So I think where we are at that point in 2023, we're expecting actually to see a pickup in activity. And we had actually on our side a really strong start to the year. But it's not to hide the fact that a lot of operators are actually under significant pressure with the operational cost and obviously the cost of debt rising. And for some of them, they'll have to be financed. So I'll be really interested to see how you are finding the current trading environment.
You're right. I mean, I share the same picture as you last year, but our business really works in two ways. We have the property development business, which I run, and then we have our operating companies. And in the UK, as you say, Premier Inn is our largest one, and actually we have a large-ish operating company in Germany and another in the Middle East. So, and they do behave differently. So the first half, we had a very good performance, particularly in our UK business, where the Omicron hangover of COVID was starting to recede. And actually from February, March through the year, we've had really good trading in Premier Inn. So far, 2022 was a terrific year. So far, in our financial year, we're in good shape. Germany lagged a little more. The social restrictions in Germany, our second largest market, really started to come off in April, May. So the market only started to restore itself, the hotel trading market, in May, June, July. And so we saw a strengthening through, obviously you have the summer disruption on business travel, but as we came out of the holiday period, in the autumn, we had a really strong trading period in Germany, where lots of events and business fairs started to come back into the market. Business travel was back, domestic travel remained high, and the inbound market really started to pick up passenger numbers into Germany. And then it softened a little more over November, December. In terms of our property activity, you're right. The first half, we were really active, buying lots of property. We did quite a lot of new hotel development. We bought some hotels in Germany and rebranded them to Premier Inn. But activity has slowed down in the last few months, largely as a result of the increasing cost in debt. Some of the traditional buyers and investors in our market have gone a little quieter. Some of the UK annuity funds who've supported the market very strongly in the last few years. So we are no doubt seeing a change in the hotel development side and actually the investment side on completed developments. And that is starting to have an impact on activity levels.
On performance, keeping on that topic and top line, because top line has been strong. Where do you see that going in 2023? I mean, we're being asked the question every day, and as always, it's a bit of crystal ball gazing, but do you think RevPAR will continue to grow this year, just on maybe, again, doing the comparison between the UK and Germany, which are slightly different dynamics?
If you look at our business in the UK, Premier Inn, we have maintained a very high occupancy through the year. So as we came out of Omicron in the late winter 2022, we decided to make sure we built volume first. And then once we'd got volume in the right place because of the high operating costs we wanted to cover, then we started to look for more rate opportunities, particularly in short and mid-term trading. And that was very successful. And actually, our occupancy this year has remained above 80% year to date. So 90,000 bedrooms in total, and we've got an occupancy in 2022 of over 80%, which we're really pleased with. Once we get to that sort of level, we've got a high proportion of hotels that are full 3 or 4 nights a week. So we can then take rate opportunity. And I think we have a little bit more permission from customers to do that because they can see the inflation in utilities, in labour, in supply chain. So we have managed to pass on some of that cost and take rates over and above. As we look forward, we're not really seeing any slowdown at the moment in the UK. January is a really important month. It's the biggest month for bookings, not stays, bookings, because people come back from Christmas and they make their reservations then as they get back to business, or they work out what they want to do in their home life, their leisure travel. So it's always a significant month that sets out the next quarter and actually the next 6 months. And our bookings have continued at a very high rate. And as we look forward, we have real confidence in the next quarter. But actually, I think it gives us some confidence into the first half of 2023. So a lot of our bookings are not long lead other than events. They tend to be in the next quarter and a bit in the next 6 months. So we're pretty confident we'll get some good RevPAR growth into the next 6 months. Now, we're rolling over a very strong period because we had such a good year in 2022. So like for like growth is likely to come more through rate than occupancy in the next 6 months. But yeah, we're relatively confident in the UK. In Germany, again, a bit later return to work. So typically it was week commencing the 9th of January rather than the 2nd. There were some bank holidays and some schools were still closed in some of the federal states. But then last week, in week commencing the 9th of January, the week before, we saw a big return to bookings and actually a lot of volume going into January, February and March, and some volume starting to go into events as they started to get mapped out through the spring and the summer. So again, we were a little bit cautious over November, December because activity levels were low, but then a big surge in January. In the last 2 weeks, we've taken a lot of revenue onto the books. So that's given us real confidence that Germany is going to see a relatively strong, I think, spring trading period once we get through January, February, which are traditionally quieter months.
Obviously, a lot of the operating costs have really increased significantly in 2022 to levels that we didn't foresee. Luckily, as we discussed, the ADR have improved, so that has helped to protect some of the profit conversion. Next year, we will have obviously the new business rate relief scheme that has been announced in the budget. So that again is helping a bit with some discounts moving from 50 to 70%, 75. But it's likely still that there might be further squeeze on the margin going forward. So how, as the group, have you responded to this cost and inflation pressure? And what action have you actually taken over the past few years to protect your margins?
We've taken a lot of action. Really, if you go back 5 years, we've always had a program of what we call everyday efficiency, which what we're trying to do through our internal efficiencies is offset the impact of inflation. And that's always how we've run the P&L is by making savings to offset the expected inflation that comes through. Now, generally, we found we can do that. The last 2 years, we found that actually the inflation has been higher than the savings we can make. So you're right, there has been pressure on margin as a result of that. It looks like, particularly in the UK, inflation has peaked and we're seeing a little bit of inflation come off. We've seen interest rates climb clearly, and that's had a material impact on various parts of our business. But again, it looks like interest rates they're certainly forecast to peak at around 4.5% in the UK. So I think we've got a bit of visibility on inflation and interest rates. The main areas we've seen at Carine in our business have an impact on our operating costs, our labour, which is our biggest number. We still own over 500 of our hotels. We own freehold. So we only have about 400 that we lease. So the rent aspect as a percentage of the whole is less than the labour. The labour is a very material cost for us, even in a economy hotel, a restricted service hotel. And actually, it's been a very difficult area because we've always also been trying to win the war for talent, where there has been less people available to work in hotels in the UK, particularly in the last year. So it's not just a case of paying people less. That doesn't wash at the moment in the labour market, so we've had to pay more.
Do you feel the workforce issues that we've seen have stabilized slightly? I mean, I think by listening to various people, I get different aspects, but again, few months or even a year ago, it was really difficult. You had really limited staff. You really had to make efforts to retain them, both with, benefits and also salaries improvement. But do you feel we've reached a bit more of a stabilized position from that perspective? Because you're probably one of the largest employers in the hospitality industry. So you have a fairly complete view, I would say, of that issue.
Yeah, so we employ 37,000 people in total. So it's a large workforce. Yes, we are seeing stabilizing, but no, we're not over it yet. And it's not just the people within our business, it's the people in the laundries and the people in the housekeeping companies and the suppliers of other services that we also rely on. And they're also seeing pressure in recruiting the right people and managing their cost associated with labour bills. So it's not just our internal people. Traditionally, after October, it gets a little easier through till the spring. So this period we need less people because trading is always softer in January, February. So that does help. The pressure eases on the business a little more. What we tend to find now is it's more in hotspots. So there are certain roles and there are certain parts of the country that remain difficult. So roles like kitchen chefs, really difficult to find. Skilled people who can grill well and run a kitchen. Now our business is generally simple, but we also have a number of pubs and restaurants that we own, so we do have an implication there. There are hotspots like the southwest is a difficult area. Places like Edinburgh, it's still difficult to get the right team. And then central London. And we get a lot of turnover in central London. Again, we don't pay anyone minimum wage. We pay above minimum wage for everybody. But people are leaving the business regularly to go and move somewhere else where they can earn a small amount more. Because, not only is hospitality a high pressure environment, it's actually hard work. I do think we've passed the worst, but I think we're going to see continued stress areas in the year ahead, both in the UK and in Germany, because we have exactly the same issues in Germany, even though arguably the borders are softer with lots more countries. So there's better migration of workforce, but we've still got pressure in Germany the same. And if you overlay on top of that, we're opening probably 10 more hotels in Germany this year in 2023, and another 15 to 20 hotels in the UK. So it's not just keeping the labour in our existing hotels, it's also finding 20 to 30 people for every new hotel we open. So it is a continual challenge of bringing in the right team members, inducting them, training them, getting them up to speed, and then retaining them in the business. So financially, we'll try and make sure our salaries and our weekly paid staff are hourly paid. We give them momentum in their income. We're also trying to give people clear fixed hours. Again, a lot of people find it very difficult if you cut hours, cut their hours, they're looking at their total income. So it's not just about how much they get paid an hour, it's how many hours are you going to give me and can I count on those hours week after week after week? And if it gets quieter and we cut hours, people find that really painful because they get used to certain hours. We also look at other benefits. So in Germany, we're helping people with travel to and from work. We're helping people with some clothing that they wouldn't get. We help people with meals. But then the whole engagement area as well of, when you have the teams in place, it's not just the financial measures, it's how do you make them part of the team? How do we make sure our managers are really good at engaging teams and giving them progress within the business and giving those that want to develop themselves within hospitality, giving them routes to progress and actually then giving them financial reward as they move up in the organization. So, I mean, it would be very hard to simplify and to summarize it, but we have a huge set of activities around recruiting, engaging, and retaining the right workforce, and also making them sticky with Whitbread and trying to keep them in our business. And the benefit of owning restaurants as well, and pubs, and different types of hub and Premier Inn hotels is we can move people around until so they get some satisfaction out of the work they do too.
What is your view on sustainability in the hotel sector, and how are you working at Whitbread to be more sustainable?
So yes, we are, is the simple answer, Carine. I'll give you some good examples. I think all of the stakeholders are now interested in sustainability, and it's not an option. We talked about team and recruiting team. We also find people, not just at management level, but at junior levels in the organisation. When we're attracting new people, we get far more questions now on what is Whitbread doing about sustainability. Do you have net zero targets? You know, can I see them? Can I talk about them? So I think it's important for our employees and those people who want to join a business that they feel is doing business in the right way and is giving back as well as taking. And so it's important from that aspect. And we get lots of challenge when people stay and they write to us and they point out things they've seen that we could do better. So we get good customer feedback and pushback. And then it's important in the investor community as well. And Whitbread, you know, my employer, is a FTSE 100 company. There are certain demands that are made on FTSE 100 companies and public listed companies generally. But also when we're raising debt now in the market, we can find opportunities to gain advantage by having sources of cheaper debt because of our green credentials. So, you know, last time we did a debt raise, we raised a green bond where we borrowed from investors at a very good interest rate, future credit facilities in debt facilities in order to be able to invest in sustainability in buildings, new buildings, and intervening in existing buildings. So I think it's really important right across all stakeholders now that we have a really clear, transparent, coherent plan that we make progress against. The good news is I've been at Whitbread 15 years. It's in our DNA. When I joined, I met our head of energy and environment, and he told me about all the great work that was going on in 2006 to replace light bulbs with lower energy consuming, to fix water leaks, to make boilers more efficient, things like that. So it's been a rolling program for many years at Whitbread. We call it our Force for Good program. We do have a very clear target to be net zero by 2040. In terms of new build hotels, it's getting somewhat easier to make them more efficient. We're on site at the moment developing a hotel in Swindon, which is going to be our first net zero carbon hotel. It effectively doesn't use gas in the business, which is our biggest challenge. The biggest challenge we've got is our existing estate. Some of them are buildings that were built 100 years ago, and we can change the windows, you know, we can add insulation, we can change the light bulbs, we can make them more efficient, we can remove draft and think really carefully about how we heat them and actually how we operate them. So the operators don't leave doors open, don't leave the grills on all day, things like that. But actually they are leaky buildings and they use gas to fuel the boiler, which heats the water. And obviously hotels need to have a lot of hot water, particularly in the morning when our guests are showering or taking a bath. So that's our biggest challenge, is how do we get boilers out of the business and therefore reduce our reliance on gas? And that will give us a big projection forward on our net zero. The trial in Swindon we're doing is really exciting. We think we're onto something and we think we can do something there. All of our electricity is already bought from sustainable sources, renewables. So we haven't got an issue with our power. It's about how we minimize our reliance on gas. I don't want to use offsetting. I think it'd be great if we can get to net zero genuinely by taking out and using renewables. The government in the UK hasn't talked about having a minimum EPC rating yet for hotels like they do for offices, or a target, but it could come. So I think we need to be ready and we need to be ahead of the legislation curve, because there's many other reasons to do it. Stakeholder interest and also financial benefits if we get it right.
And I think a lot of people, a lot of owners, investors will look at Whitbread as a leader and example in that field. So the more you do, I think the more people will follow your example, which is great. Now, looking at 2023 and your sentiment, what opportunities do you actually see in the hotel sector in the UK and in Europe in 2023?
It's going to be another relatively difficult year. I think we're likely to see the economy contract further in 2023. The good news is that most of the forecasts are that it's going to be more shallow than it was originally thought to be in terms of the recession in the UK that we're undoubtedly in right now. So I think, you know, we can be more positive about that. There is still a lot of money in people's bank balances, both personal accounts and business accounts. And yes, there is forward pressure on people through utilities, through people rotating off fixed mortgage rates into floating rates. And there's rising cost of debt in business. But I think we're seeing potentially now some stability in UK government policy and in fiscal policy. The last 6 months, the investment market did change. People funding new hotel developments, people developing new hotels themselves, and actually people buying completed assets. But it was more, yes, there was a little bit of a move out in pricing, but we also saw just a change in buyer landscape. So we had a number of hotels that exchanged in the last quarter of last year. And in fact, 3 deals in December happened with our leases that were signed in December, didn't complete historical leases. And they all were achieved at a yield, a net initial yield of between 4 and 4.5%. But it was really encouraging that those 3 transactions completed. But the buyers were different. They weren't the UK annuity funds we'd seen before. They were different types of buyers. There's a bit more private money in the market at the moment. There's a bit more high net worth funding. There's a bit more overseas money we're seeing at the moment in the market. And I genuinely think people are seeing some value right now. Now, that's all really important because in the year ahead, as you've got this high demand for hotels and travel, and particularly in the UK, and at one point we were worried in 2022, this was just a lag of trips that were delayed and now we're all happening. Actually, I don't think it is. I think it's sustained higher levels of domestic travel for business and leisure. And then the inbound market has now returned to the UK and has returned somewhat to Germany. And that's adding further strength. And events are now starting to appear more regularly. That high level of demand, I think, gives us real confidence. And that will enable us to build more and more hotels. So, you know, we're cautiously optimistic about the year ahead from a demand perspective. We think the buyer landscape for investments is settling a little, albeit pricing has moved out, you know, 50 to 75 bips, certainly for our investments. And we're going to push on. We're going to actually accelerate our plans in the year ahead. And we'll do the same in Germany. You know, we're very eager to grow in Germany. We now have around 80 hotels, 45 open and 36 in development, in construction or in planning, in for permission to build. And again, I'd love to see that accelerate in the next 2 or 3 years. So we see this as an opportunity. We're confident on the midterm in both markets, but there might be a few more months of things settling down and just being really clear that inflation's peaked, interest rates are stabilizing and not likely to go above, you know, 4.5%. And I think then, as we get into the spring, we'll start to see activity levels in the UK restore themselves. And as I say, I'm cautiously optimistic and confident for the year ahead.
I would hope that we've seen the worst parts at the back end of last year. So I think the second part of this year, we have all reason to be optimistic. So thank you so much, Mark, for your time today, your insight. And we really appreciate it. Thank you.
It's a pleasure. Nice to see you, Carine. Here's to a happy 2023.